Morning.
Good morning, everyone.
Good morning.
Hi, good morning. Can you all hear me okay?
Yep.
Yeah, we can hear you.
Fantastic, fantastic. Let me just, anybody, do I have a volunteer for co-hosting this, as kind of like Duncan is not on yet. I could do with a little bit of help dealing with the people that are accessing the call. Anybody confident with Zoom that would like to help out? Don't all rush at the same time, you know. Okay, don't worry. I'll do both at the moment. I'll try to put my multitasking hat on. Okay, so today we're still kind of like early days in in January, and kind of like being the first week really that the markets have been sorry, Duncan is messaging me that he's having problems with them. It's the first week that the institutional traders and the markets have been fully active. You know, as you know, December and before the holidays, you know, there's very little trading volumes on the market, so everybody takes a holiday to spend with their family, and then everything starts again in January. Now, one of the things that happened in 2021 that I wanted to kind of like discuss with you is that crypto for the first time has, say, grown up and been playing in the same place as the big boys. Okay, so in a sense, has been accepted as an asset class, and institution has started investing in the market at least as much as they have been allowed by their compliance departments. Okay, because it's just this year that we've seen regulation kind of come into place, and crypto being accepted by different jurisdictions across the world. So you know, to begin with, we're seeing kind of Switzerland, Germany, Canada starting to regulate indexes for crypto, and then having exchange traded funds denominated in Bitcoin. And in Switzerland, we have in different coins that have been included in ETFs as well. So you know, following that, and we had you know, the US that has started reluctantly, accepting a crypto futures ETF, and that is started a little bit of institutional involvement, but not fully as a normal. Normally institutions invest a maximum of 5% into one asset and about maximum of about 20% into any one sector. But the first institution started playing around with this in a sense as a tradable asset. Okay, so with an investment of between 1 and 3%, so they funds under management, and as a trading in and out of it, taking advantage of volatility. Duncan, I've made you co-host, so if you don't mind taking over the letting people in and out of the room, I'll be grateful.
Sure.
Okay, fantastic. So let me just change this again. What we're seeing is that the first institution dipping their toes in the water. But another effect of this kind of like slow maturing of the market has been the correlation between cryptos and the stock market and other sectors of the economy has gone up. So obviously we need to take a lot more attention now, not just with what happens in crypto, but what happens outside of crypto, as a macroeconomic trend there are. And also news, kind of like news release schedules, because those now affect the crypto market as any other market now quite heavily. Now let me share my screen and let's look into a few things. First of all, I just want to show you. This is Bitcoin. Okay, Bitcoin against the USDT Tether. And I just want you to just have this is a 1 hour chart. So what's happened this week? If we zoom in a little bit, maybe it's easier to see. If you see here, this, especially this movement over there, this is when we have the inflation data announcement in the US. And so, as you know, if you're part of my group, I actually sent you a kind of like a warning about this, and it's saying, okay, the inflation data is going to be announced. At this time it was like a 2:30 UK time, and the effect that this will have in the market, it depends on if it fits in with expectations, because the market prices in these announcements before the announcements, and then the market only moves if the announcements are, I would say, something that the market wasn't expecting. Okay. So in this case, the inflation last year in the US was 6.8%. The market had priced in 7% as expectation, and this is pretty much what the inflation came in at. So it's seen as a positive news for the market, and we see the effect in the crypto as well, because all of a sudden it went from 40,000 to then before settling down today to over 44,000. It kind of like and this is not just in the crypto market, but also in the stock market as well. But inflation has been the big talking point, of recent times, and there are different points of views. Okay, but we need to understand this to understand as well where we are going from now on for the following months. Okay, now first of all, crypto, how is it seen by the market as an asset class? Okay, it is seen, the closest comparison. Excuse me, I have got some background noise, so can you please make sure that you're muted if you're on the call? Okay, so it's seen by the market in a similar way to kind of like a new technology company. Okay, so they're seen as kind of like a very at the top of the risk the risk as an investment class. And it's seen as very leveraged, so something that reacts, in an exaggerated market movement. Okay, sorry, getting background noise again. So can you make sure that you're all muted? I'll be grateful. So it reacts in an exaggerated way to market movement. So if the market goes up and it's in a positive mood, then crypto goes up more than the average of the market, and the same way on the way down. But what happened here at the end, if we go pass on to the daily chart, what happened, in this November, December decline in crypto prices. It's similar to what happened to technology stocks. Okay, so actually crypto fared better than many new technology stocks. They actually dropped 70-75%, and the movement, and if we measure the drop, come on, why are you not wanting to play with me today? Okay, please. So if we measure this this drop, we are talking about a 40% drop in the crypto market. Okay, so it's in a way the decline of the movement that we've seen in the market from technology into value investing. It's already been priced in with the price of technology stocks and the price of crypto as well. So we've had this drop in price that we were kind of like it's happening to the whole I would say risk on type of assets like crypto and new technology. And we moved on to what it is considered more value stocks, like for example utilities, like automotive and such. Now, is this a good thing or not? Because it's been reported, especially in the third quarter in the US, that the GDP was kind of like positive by about 2%. But what hasn't really been reported very much is that where this GDP came from. So who spent this money? Okay, is it consumers? Is it companies, and so on? And if we actually start looking into that data, let me show you something else with you. We can see that this kind of like economic energy is come more than from consumers like me and you. It's come from stock, kind of like restocking and inventories. So especially because last year, I mean, if you remember, there were lots of problems for the supply chain all across the world, and we're all seeing it, because if we look at what was available, for example, towards the end of last year in supermarkets, just when you go and do your weekly shopping, there were a lot less products available on the shelves as they normally are, simply because of the difficulty of sourcing a lot of these products and the misplacement of many containers across the world, due to the pandemic. Okay, so if we strip out the inventories, this kind of like company restocking, knowing that they're going to have problems in operating as they normally had with the just-in-time management, for example. So if we strip that out of the economy, we see that the economy was pretty flat over the third period. But at the same time of that, what happened is that because there is kind of we've gone from risk on to risk off, and fear has basically taken charge of the market. Then what happens normally when fear dominates the market is that there is a flight to safety, and internationally this flight to safety normally translates with a higher value for the dollar. Okay, so in one sense, we have had the inflation is very high. This is due to what was happening last year, and most of the year the markets were in a positive mood. Okay, but at the same time, what's happening now is that the what was I say? Because the dollar has gone up in value, and most commodities are priced in dollars. Excuse me. That means that price of commodities in
We can't hear you, Luca.
Luca, you seem to have some issues with your headset. You've run out of batteries, I reckon. Because he can't hear us, then he's not responding. Maybe it's just it now. We can't hear you.
Can maybe call him on his cell phone. He goes on these long things.
Yeah, just giving it a go now. He just needs to look up and see if everybody's waving. I'm just phoning him now.
But sadly, he doesn't. He always just goes on these amazing.
He's in the screen, isn't he? And bear with me. Hopefully, he'll answer. We got you now?
Sorry, guys, can you hear me now?
Yeah, we got you now.
I don't know what happened, but how long was I talking to myself, basically?
About 5 minutes.
Oh, fantastic.
We were waving and all sorts. Put the gallery on your screen in the corner so that you can see.
Yeah, I've got it in the corner, but I didn't see. I think most of the people that got on my gallery were just had the static image, so I couldn't see. So how far did I lose it? What was I talking about? So I can start again.
Well, we don't know. You were right in this chart that you've got up on your screen. And,
Luca, the last bit that I've got is that you're talking about that the US dollar had gone up in value and most commodities are priced in US dollars, and that's where you just trailed off.
Okay, fine. So the effect of that, and here in this chart,
it was just after risk on, risk off, that bit.
Fantastic. Thank you very much. So what I was mentioning is that because of the dollar's gone up in price in commodities as price in dollars, this will mean the commodities are cheaper to buy in dollar terms. Okay, and so this will have an effect, at least in dollar terms, of dampening inflation in the short term. So what we're probably going to see in the next few months is the effect of some of the commodities that have more influence inflation, like, for example, energy and food prices, actually start having a negative effect. So it is thought that the kind of like especially energy will going to have a negative growth in terms of inflation. And also that should have an effect. This strengthening of the dollar should have an effect on food prices as well, that have been growing at about 6-7%, in price, and creating a problem for the consumers, because at the same time as we're seeing that, we have seen that the median wage increase. And when I talk about median, if we look at about, so 100% would be the top earner and 1% would be the bottom earner in the economy. Median is the average. Okay, so the average wage that people take in has actually gone down since 2020 by about 3% a year. So when you combine that with inflation, you can see that the result is people have got a lot less money in their pocket to spend. And so this is one of the reasons why the kind of the economy is quite flat, even coming out of a recession and coming out of a pandemic like we have been, where you would expect the economy is starting to grow at a really high growth rate, simply because it's actually contracted in the previous period. Okay, but it's still flat. So at the moment, as I say, countries across the world are trying to tighten the monetary policy to control inflation, but there is a very strong possibility that we can move into fears of recession in the next quarter, and then again a loosening combined with maybe inflation that is seen as not getting out of control but being under control. We can see that a new loosening of monetary policy, especially consider that we are in an election year in the US, and if you are in charge where the economy tanks, it's like a death sentence for any politician. Okay, so this is kind of like the kind of like big view, but I wanted to show you some other charts so you can get an understanding as well of what is happening in the real world. I mean, just for example, this is the difference between the interest that you can get, from the Fed and the inflation rate. I mean, and you can see obviously most of the time inflation rate is above, apart from very, very short period in time in 2019, is always above the interest that the central bank pays. But look at it here. Look at how it's, inflation then has gone up exponentially. And so if this was a product you will want to buy, you want to FOMO in, give me some inflation, I want some of that, because it's going up to the sky. Okay. And this is affecting people in the pocket, and this is kind of like where the inflation is showing up. Okay, so this you can see now the CPI is at about 7%, and we can see the different parts of it. So how the services at the bottom are growing. These are kind of like the goods, and then the green is food. And the kind of gray is energy.
Luca, so, can we interrupt you again, please?
Sure.
It seems that the screen that you're sharing with us is not the one that you're sharing. We're still on Binance Tether, Bitcoin Tether.
Let me start again. Sorry, I don't know what's happening there. Let me just share my
some ghosts in the system today.
Yeah. Okay, so this was first of all, what I was talking about a minute ago, so kind of like the Fed's funds rate, which is now close to zero, and this is the inflation rate, the blue line. So if this was a product you will want to buy, if it was possible to buy inflation. Okay, and this instead is how the inflation is showing up in different sectors in the economy. So we start from the bottom. This is kind of the services, then we got goods. The green is food, and just have a look at how much the kind of like food inflation has actually gone up in recent times. Okay, so this is really starting to hit the consumers in their pocket, and the gray one, the kind of has been dominated, recent times as well, is energy. So a lot more money is people are spending just on necessities, just to heat their home, to put gas in their car, and so on. Okay, so. This is, it's really interesting to see, what happens in Bitcoin terms and into crypto at the same time as all this is happening. Got a couple of things to show you there as well, and this is probably the main one. It's interesting, kind of like the Bitcoin reserves on exchanges, and the orange is the price of Bitcoin. And the blue is the amount of Bitcoins that are on exchanges. Obviously, if you want to buy and sell Bitcoin, then you have to transfer it onto an exchange first, usually. and then from there you can sell it. So in a way, the reserves going down, it means that there is accumulation of Bitcoin, so people don't want to sell it. So this can translate. So if you basically the blue line going down is people buying Bitcoin and transferring out of the exchange accounts and into the cold storage. Okay, so and there are different metrics. I mean, I can't show you everything today, otherwise we'll be here forever. But there are different metrics that show us as well that the whales, what they call the whales, so the big investors in both Bitcoin and Ethereum are accumulating as the price have gone down. So when you see this period here from November till today, they've kept on buying. So even if the price was going down, the big investors are kept accumulating. And we are looking at, especially if you're looking at, this is another metric that's saying pretty much the same thing, slightly different graphic because it's more, it's a different time frame. But as you can see that there has been a general decline from April 2020 in the quantity of Bitcoin on exchanges. Okay, it's not necessarily 100% correlated to price, because you see sometimes even the price goes down and this goes down, but generally this precedes kind of a jumps and appreciation in the price of Bitcoin, because it's at the end of the day is supply and demand. Okay, so the blue line can represent pretty much the supply. Okay, and obviously the demand is not on this graph, but the price is the result of demand meeting supply. On a different aspect, because I know that every time we have these calls, there's somebody that tells me what's going on with Cardano and why is it not moving, etc., etc. I just wanted to show you this. This is from Charles Hoskinson Slack. They tweeted the other day. So these are the projects building on Cardano right now. So 200 projects that just waiting to be unleashed on us. There have only been 18 projects so far launched on Cardano. Another 17 they're just about to be released, but they kind of like these 200 projects that would hit the market at some time in the next 2 quarters, and Cardano is going to be on the is going to be then on all the metrics as a smart contract platforms with lots of apps on its system. Okay, so so what we got to expect basically for the next few months? I think in the short term, pretty much I think this is a good position for crypto, because if you are in crypto now and if you're buying at this level, you are buying at the point where the market has already priced in the extra risk for the technology stocks, and the technology as the investment has moved out from technology into value. There is a very strong question about it, because one of the other big things that happened in 20 and 21 is that especially investment, not just in crypto but in stocks and shares, has become a lot more accessible. So if you look at something like Robinhood or other platforms of that sort, where people can invest in shares, in fractional shares with a few dollars, that meant that there has been, the market hasn't been dominated by brokers and by so-called experts, but there has been a lot of influence from social media, like Reddit, for example, and we all heard the story of GameStop and Wall Street Bets. That means that not always prices are reflecting fundamentals, but more like the narrative that has been going on social media. And one of the big bubbles that we might be looking at for the next 12 months, and when we start seeing reporting numbers from car producing companies, is exactly the automotive industry. Because if you see what's going on in the news, and recently there was an announcement that Ford, for example, is doubling its production of electric vehicles, and there was a huge jump in price of Ford stock. Now, I mean, that if you really look at the numbers properly, it doesn't really make much sense, because we're looking at electric vehicle production of, from Ford. It's pretty much about 2% of the whole production, where the other 90%, 98% is guzzlers, and so on. So what effect will that have at the end of the year on the balance sheet? Very, very little. Okay, but at the same time, if this trend continues of a move towards electric cars, and so the kind of the consumer sentiment moves towards not wanting to buy the kind of cars that Ford produces, that's going to have a huge effect on the balance sheet. So, and what you got to think about is not just yes, it's going to be bad for Ford, and who cares, but the thing is that the automotive industry is probably the highest user of consumer credit, because how do you buy a car? How do you buy a car? Is you buy, you put a deposit down, and then you have a credit, and you pay it off every month. Okay, so what is going to happen is that if there is a problem for big car companies, the Ford and the Chrysler of this world and so on, then that is going to reflect into the credit market. Okay, and that is kind of like bad news for everybody. So that was the what pushed the crisis in 2008, and this what might be at the forefront of a market crash in 2022. Okay, and so when that happens and money then moves out of value investing, and it starts looking at where is the best place to to keep to invest for the future, especially considering what's happening with money, the money supply growing at rates that have been unprecedented in history, over 20% a year. Then I think there's going to be a move again towards the kind of stocks, and crypto is part of this as technology. The kind of stocks like Tesla, like Zoom, for example, like some of the biotech industry, they've been on the forefront of developing vaccines. They are the strongest growing narrative out there. And if we compare it to the dot-com boom or the late 90s, early 2000s, is very different, because at that time the valuations that were in the market were simply because of expectation, but they had no foundation. Okay, so there were no big numbers in terms of revenue being produced by the company, just what the expectation that there would be in the future, and often this expectation were unfounded. Okay, nowadays, if we look at companies like Zoom and like the biotech industry as well, they got balance sheets of billions of dollars. So these are not just kind of like a fly-by companies that are working well today because of the pandemic, but these are really real success stories that can build on what they have already delivered. And the same thing in crypto. It's 2017, recently as 5 years ago. This was a kind of a speculator's dream in a way, because there was no real value delivered in the world. There was nothing that you could do in crypto that you couldn't do in the real world, really. It was just like a pipe dream. Okay, but now in 2021, 2022, we have these applications now that are are producing real efficiency and real value, and the transactions that are going through these these networks, these blockchains, are in the in the order of tens and hundreds of billions of dollars. Okay, so it's not just investing in something that could do well in the future or could just disappear, but these are kind of like real. It's a different paradigm than a company, because mostly are decentralized organizations, but they are delivering real value today. Okay, so so this is my view for the macroeconomic outlook for the kind of like short to medium term. And it'd be interesting to know what you see. But for me, we cannot look at crypto just saying which coin should I buy, without looking at understanding what these projects are delivering, and so how they're going to, if they're going to be there. First of all, in the medium to long term within crypto, kind of like if the product it's strong enough to still be there in 2, 3, 4 years time, but at the same time, what the old sector is delivering and how it is disruptive compared to existing technologies. Okay, so this is what we got to consider. So kind of like what crypto is replacing growing from the point of view of demand. So is it solving a real life problem or not? Okay, and this is why I'm talking about macroeconomics last week, and I'm talking about it today as well, because I think it's easy to start buying stuff because somebody has told you on Facebook or yes, this coin will do well, will grow 100 times or whatever. But it's a little bit more difficult to understand really what value these projects are delivering. And I think I believe that this is where the real value is, understanding how we're standing in terms of technology and basically what is the world going to look like in 5 years, and who's going to deliver the services that we want to use. If crypto has a hand to play in that, then obviously it's got a relevant value. If not, then maybe we look elsewhere. I mean, we don't necessarily have to be involved, at all. Okay, let's start taking some questions now, because I have overstayed my usual half an hour at the beginning. So let's start asking start answering some questions. Duncan, do you have enough time? When I'm talking, I don't have time to read everything.
Well, we know you don't even have time to look up. There are a few. Eric is proposing that if the availability of Bitcoin is going down, should that not mean that the price will go up? Is it as simple as that? And by availability, does that cover everything? When
it doesn't. No, it doesn't. It doesn't cover everything because the price it doesn't just rely on spot trading, but the futures has a big place in determining the price of commodities, and futures are settled in cash. So you can buy and sell futures contract without making any difference to the Bitcoin supply. Okay, but long term, the trend in the spot availability of a commodity is going to determine price. Basically, as more people want to buy and hold it, then the price, if there is enough demand there, the price only has one way to go. And seeing sometimes, that's why crypto sometimes is good, because we can see the data on chain. It's not something that you cannot see when you trade stocks or forex or something like this, but with crypto you can see everything is on chain. So if people want to sell Bitcoin, then you will see these coins being moved to exchanges first, and at the moment that is not happening. So there is a growing sentiment that price is being heavily manipulated at the moment, and what this is why I was talking about what happens in December. And talk to any trader, any professional trader will tell you that on December they take their holidays because there's nothing going on in the market, and the volumes are very thin. So that means when the volumes are low, it's very easy for somebody that's got a big chunk of something to influence the price. Okay, so there is a big sentiment of, big belief of many people that are involved in this sector that the prices have been heavily manipulated in the last 2 to 3 months because of this reason. Okay, so I mean, take it as you want. I mean, it kind of like a hearsay more than anything else. But there are some really funny games that we can see if you follow the price movement that are not really justifiable by normal analysis. Okay.
Which brings us to Andrew's question, following on from Eric's. Eric's got another nice question about metaverse, which we can come to in a minute. But Andrew asked, so when a lot of whales are investing in a particular coin, does that make it a good thing? Is that interesting to us, or would we be, as Andrew puts it, less likely to get stung, bit negative, if we're looking for steady growth of the project sort of organically, maybe is what he meant. So yeah, when people are piling in, we've spoken about this a lot, but specifically big investors and whales, I think Andrew is relating to that.
Yeah, I think it says a couple of things. First of all, when you get whales getting involved in certain projects, it means that a project has reached kind of like a critical mass in a certain sense, because if we look in, let's not just talk about whales, but talk about institutions as well. Institutions have got very strict criteria on what they can or cannot invest in. Okay, and for example, they wouldn't enter markets that were not liquid enough for them to get out with their large positions. Okay, so this is why the main playground in crypto of the institutions has been Bitcoin, and to a smaller degree Ethereum, and to an even smaller degree is the other coins in the top 10, like obviously the Polkadot, the Solana, the Chainlink, Cardano, and so on. And more recently, kind of like Avalanche and so on. So that's the one thing. But once big investors get involved in something, then you have to look at what kind of thing is that they're getting involved in, and how big it is, and how easy is it to be manipulated. So you look at Bitcoin, kind of almost $1 trillion in value. You look at Ethereum, again, several hundred millions of value. They're large enough to absorb whatever a few whales may want to do. In smaller projects, it's more worrying, because when you look at I don't know, something like Shiba Inu, for example, which is a meme coin, we know that most of the coins are concentrated in very few wallets. Then that is a worry, because that the value can go from 20 billion to 2 billion in a heartbeat. So do you really want to be caught in that when that happens or not? But at the same time, if you could see that there's a strong investment of whales in Bitcoin, in Ethereum, which are very liquid markets, then it's kind of like a vote of confidence in that market, because it means the smart money is accumulated, is investing for the long term. Okay, so that's how I see. For smaller projects, I'll be, in a way, being worried the other way around, because I don't want to be caught in holding the can when whales decide to exit a particular market.
All right, so we have got some more questions. What a good week this is. Okay, so could you just, for Michelle Starr, give us examples of what you mean by candle stocks? Michelle says, do you mean Tesla, Zoom, etc.? But maybe you could just
sorry, which kind of stock? Sorry.
Well, I think Michelle, if I'm wrong, unmute yourself and explain. But I think what Michelle was asking was, what do you mean by candle stocks? Do you mean, for example, Tesla, Zoom, etc., or what makes something what you would call
technology?
A candle stock?
Sorry, Michelle, are you talking about technology stocks?
Luca,
Hi.
it sounded like you said candle stocks.
Candlesticks.
Oh, was it candlesticks? Oh,
I was confused
I'm new
myself.
to this, so I'm just all new to this, so it's like I don't know what you're talking about.
Yeah, candlesticks are the charts. The chart that we're looking at, and I'll show you in a second. Okay, so this is a candlestick chart, because each unit of time, which is represented by a candle, so each one of these sticks, it's called a candle. Okay, it's called a candle because it's got like a fat. If let me make it a little bit bigger, so at least it's a mini. Sorry, why am I doing this? Mini trading lesson way. You can see if you look at this red candle here, it's got a fat body and it's got 2 wicks. So this is why it's called a candle, And the kind of the fat part is saying where something started, where it finished. Like in this case, it's gone down. So the top of the fat part is where this we're looking at daily chart. So this is 1 day, this candle. So at the beginning of the day, the price was here. At the end of the day, the price was there. And then the wicks tell you that during the day, the price has gone as high as here and as much down, as far down as that, but it closed at this level. So that's a candle, and that's the information that can give you kind of like very, very shortly, without going into patterns and everything else. But
okay,
yeah.
so why did you mention Tesla and Zoom in that sentence? Like, I'm trying to.
Yeah, I was talking about technology. I think I was talking about technology stocks. And
Technology. Okay.
Stocks. So Tesla, Zoom, biotech companies, they all can consider kind of like highly innovative new technologies that are appearing on the market, you see.
Oh, I got it.
And
Okay.
they're considered risky as an asset class. They're considered riskier than the average market stock. Okay.
Okay. All right. Great. Thank you.
Okay.
All right. Tim asked the question again about a specific project or coin, and Tim says, could you tell us about Wonderland? Actually, I know that you don't really like that kind of question, so I'm going to ask Tim to drop in the chat what you know about Wonderland, and then maybe we can look at some specifics, if that's all right.
Yeah, sure.
Now,
We're going into talking about Wonderland. We're talking about yield farming, which is something that's not is not really appropriate for this session. By the way, that's a very specialized topic of this type of discussion that will need a couple of hours to just give you any to do any justice. Okay, so I'm not going to just not going to talk about things like that in 5 minutes, because I don't want to wreck people. Okay.
But you are on the private sessions, Tim. So guys, do some research and maybe bring some questions there. Eric would like to know, he sees enormous amount of money invested in the metaverse. So how can we participate? I know we've spoken a lot about this, but I think Eric's looking for a fairly simple answer, because he says, is it by buying mana or other coins that are around those projects? What are we saying about that, Luca?
Yeah, we know you mentioned mana, like the Decentraland and Sandbox. They're probably the two strongest projects. But what's happening, and what we've seen recently, and we talked about it in previous crypto hours, is that brands are moving into the metaverse. Because at the end of the day, if you think about it, and again, I always say, think about these things in a logical way. Okay, if you are and I know that many of you in this room are property investors. Okay, so let's say that you invest in commercial property. How do you value how much a shop in a particular location is worth? You value it by footfall. Okay, obviously, the more people can see your window, okay, walk in front of a particular window, the more valuable that piece of real estate is. Because at the end of the day, as a company that produces certain things and has shops to sell to the consumers, you want consumers to be exposed to your product. Now, if people are spending more time now online that you do by walking down to the mall, this is where these companies want to be, because if people buy online rather than buying physically by going into a shop, then obviously they want to be visible when people are looking for something to buy. Okay, and we have seen this. Like the most recent example is it's Adidas example. Adidas did this really, really well. They had an NFT collection that sold for over 22 million. And by and not only that, but also have some pieces of NFTs that you can wear, that your avatar can wear. So the avatar is like your representation, your digital representation. Okay, so if you think about it, as you go to the shops and you buy a pair of Adidas shoes, or I don't know, a boss suit or jacket or something like that, because you want to show off in front of your friends, the same thing is happening now online. As people are spending more time online, so instead of spending money on by going to the shop and buying a kind of like an Armani pair of jeans, they're spending money on the digital avatar, so getting them to wear stuff online. And this is kind of like, is showing up as NFT sales. And there are products now. Some of the brands, they are selling more online, almost like they are selling kind of like digital products, and they're selling real products. which is amazing. It's simply because they want to be in front of the user, wherever that user is. If the user is online, they want to be there. If the user is in the shopping mall, they want to be there as well. So, and they're going to allocate resources according to the footfall. So, number of visitors to a particular metaverse, for example, and number of visitors to your local shopping mall. It's the same thing in terms of how you take advantage of this as an investor. It's this is a lot. You need to spend time in the communities, and there is no shortcut for this. So you need to have a look in because there are many different metaverses. Sandbox and Decentraland are just two examples of this, probably the most well known, but there's hundreds of metaverses out there. So as usual, you can invest in some of the blue chip stock, as you can see the Sandbox and Decentraland in this example within the metaverse, or you can invest in some of those that are up and coming. Now, obviously, the ones that are up and coming may be more risky because they don't have such a developed, strong community as the others, but then they have more potential for your investment to grow many times, because they hadn't quite had the explosive growth that Sandbox and Decentraland had already experienced. Okay, so that's it. You just like spend some time on social media, finding out where people like to be, and what projects are doing well, and then get immersed in those communities. So find them on Facebook, find them on Reddit, on Discord, and see how many members the different communities are, and have a look how much interaction there is between the members, how much people are talked about on Twitter, for example, and so on. Community are talked about on Twitter. So these are the kind of things to look at, and sometimes that may mean sometimes this is the kind of investment that you want to do. It might mean sometimes taking a punt on things because it's very difficult to tell at an early stage which project will do well or not. But yes, there are many out there. I mean, Eric, I can see that in the message you heard about Earth2.io is one of those projects. I mean, whether it's going to do well or not, I know there's people that are very convinced it's going to do well. I don't know. Time will tell. But you can mention, I could give you a list of 20 of those, to be honest with you, and and they all have the same, the same opportunity. How well projects will do will depend on community. That's all it is in crypto, especially for these are kind of like social projects more than structural projects like the Ethereum, like the Cardanos, like the Polkadot. These are kind of like apps. It's like if there was a game, and you tell me, okay, there is this game that is being released, and now releases of games are kind of like multi-million affairs. Do you know before a game is released which one will do well or not? Do you know which one is going to be the next Fortnite? I don't know. This is the thing, and often the ones that do well in these cases in social environments are determined by the community. And then in crypto, obviously, you look at the technical aspects. So which blockchains are more have the structure in place to cater to those communities, and then you can start looking at, for example, okay, I think that I like this particular blockchain, so let's have a look at the metaverse projects on that blockchain rather than look at everywhere. So try to be, in life in general, in business is it pays to be very specific and digging into niches rather than just looking at general things, so just to give an example, okay, one of my previous incarnations, I used to do keyword research. Okay, so if you have to pay to have your product on Google, for example, and you pay by the kind of times that people look at your search or your keyword, okay, and you pay so much per view, so much per click, then you want to be careful, because let's say that you have, I don't know, a cottage in the Cotswold, that kind of, okay, it's a holiday let, and so you advertise for holiday, Okay, the general term holiday days probably has about, I don't know, 100 million searches per day or something like that. Your budget will be gone in about 15 seconds. So you put $2,000 of maybe advertising budget gone in 50 seconds. Results, people booking your cottage, 0. Okay, but if you put the same £2,000 on I don't know, cottage in the Cotswold that caters for 6 people, for example, that's a very specific search term, and only people that are looking for a cottage in the Cotswold there can hold at least 6 people will actually type that in Google. Okay, so it's the same thing here. Being specific pays here. So just researching the kind of project that interests you, but also research the community that is more likely to house that project too, and that will kind of like help you to use your time effectively, and not just get stressed out because you're looking at everything. There's too much information to take in. Okay, because this is what's happening in crypto at the moment, and this is what we're trying to do here. By the way, we're trying to sift through all the information and to present to you what is relevant. Okay. Any more, Duncan?
Yeah, now for something completely different. A couple of weeks ago, I think somebody, it might have been me, even mentioned that was it Polygon or one of them sort of had a crazy dip to zero, almost zero, and you said that it was to do with a server going down. So Cornelia has mentioned that there was a crazy fast dip all over the crypto markets on Tuesday afternoon, with are you a star, Cornelia? That sounds like how I write. With not only ADA to 96 cents, but many more coins. How can this happen? What event or info or the general cause was there? And yeah, what's going on there? Do you know?
That was before any information. I kind of like, this is what we had up to very recently, and if you look at where the prices started moving, it was exactly 3 days ago. So today is Friday, Thursday, Wednesday, Tuesday. So you're looking at Tuesday, and fear was completely in charge of the markets. This is what we told you before. One of the things I showed you is kind of the fear and greed index, where at its lowest value that it has been for a long time, and normally that represents a very good time to buy. Kind of like buy when people are fearful and sell when people are greedy. Okay, so this is what happened, and then we had the inflation announcement, Cornelia. Okay, so people were calmed down in a way, thinking, well, the world is not going to, to the bin anytime soon. It's not kind of like collapsing on itself, so we can carry on as normal, and things have kind of like calmed down and started taking a more calm approach to things. So we know that crypto is not disappearing anytime soon. So so again, technical innovation is not stopping simply because people are fearful. It's just a temporary blip in prices. And this is why it's important to have, it's important to understand what you are investing in, so that you can buy this period, these crazy times like that, when prices can go down 20% in a day, something like this, without batting an eyelid, because you know that you're confident that you have the right things in your portfolio, and that you will be a winner in the long term. Okay, so this is what's happening, Cornelia. I think we've gone up a little bit in the fear and greed index, but it's still a very weak market at the moment. And so there is, I mean, the other thing in technical terms is that when we see, let me share the screen again for a second as I go back to the Bitcoin chart. Now, when we see something like this happening, okay, like Bitcoin losing 40% in a matter of 2 months, there's one thing, there's such a thing as leverage in crypto trading, okay, And what do you think that people would do when the prices start going down? They kind of like they bet money that they don't have, like borrowed money, that the price will carry on going down, kind of like a carry on with the trend. So at the moment, we got very leveraged position betting on the price carry on going down. And what normally happens in this case is there's such a thing as what is called the short squeeze, because if you're thinking about that, people have leverage betting on the price will go down, and they start seeing that the price starts moving in the other direction. They see they have to cover their position. Okay, and how do they cover the position? By buying whatever they are exposed to. In this case, the opposite will happen. Obviously, if the price is up here and going at the top, people will be leveraged on the way up, and then there could be like a long squeeze in the sense that, you know, if price starts moving in the other direction and people need to cover their position. In that case, if we are up here, then people need to sell to cover their position. But for where we are now, I mean, if price starts going up, then we will see some. Possibly, you know, if by looking at this chart, I would say if we start going past this area here, because many people would have put their stops kind of like long term around this level. If we start going past this thing, then we will see kind of accelerating all this movement on the way up towards the next high level at about, you know, 42 or beyond, 52 and beyond. Because people need to buy to cover their positions. And also what's happening as well, if people don't cover, then the exchanges do it for them, because if they don't have enough money in their account to cover their position starts going in debit rather than credit, then they will be liquidated automatically once they get their margin call. So they either cover, they put more money in their account, or everything gets sold automatically. Okay, and this is what happens when you see something like this. Can you see here? We're going in one day from 53 to 42. Okay, this is massive, absolutely massive, brutal. This was a brutal day in the market, absolutely. And this doesn't happen just by normal market movement. This happens with liquidations, and we know that there will be, in this candle here, this day, we had about 1 million people having their accounts liquidated. Okay, 1 million traders lost everything. Okay, so this is another thing to say. I'm not going to say to you because I think you're all like adult enough to judge by yourself, but do trade crypto at your own risk. Okay, and if you do, if you decide that trading is for you, you want to trade crypto, never ever trade on margin in crypto. Okay, so don't trade with borrowed money. Trade with your money if you want on a one-to-one basis, but never leverage trade in crypto, because you are going to get wrecked. The numbers are stacked against you. Okay, let me finish. I hope that helps. Okay, anybody else? Andrew, you always talk about Cardano, man, and I think you came in a little bit late, and I think I've got something to show. Where was that about Cardano? Where is this? Can you see my screen now? With the 199 and 18, these are kind of like projects building on Cardano. Okay.
Screen
So,
not
Can't
visible,
actually see your
Luca.
screen, but we got the point at the start. And don't worry, I'll keep
shared the
drumming
wrong
this
thing.
stuff into Andrew's head. I don't know if it'll ever stick. You know.
Okay, this is the thing I wanted to share, and the difference here when you're talking about Cardano. I mean, you kind of like many people don't understand the fundamental concept behind it. First of all, this is project number one in crypto for development activity. Okay, number one, not number two, not number three, number one. Okay, so if you look at the GitHub commits, this has been constantly being at the top of development activity. Secondly, there's kind of like look at the concept behind project. This is why I'm thinking fundamental analysis in crypto is important as well. So kind of like look at the attitude of projects. So we can see, you can look at things as we're doing our own thing. We're doing our own thing in crypto. I don't know where I am. I'm lost. I'm lost in here with all different screenshots. Let me just close everything and make this bigger. Okay, so we can look at things as stop share. That's it. Found it. Okay, we can look at we can kind of two different perspectives. Okay, crypto is very innovative technology. So we can look at project they're thinking, well, we are building our own thing, and we are in this fantastic technology, and then we're going to find how this is going to be applied to the real world. Or we can take the approach that Cardano is taking, which is, okay, these are the problems that are there in the real world. How can we help them? How can we solve this problem? How can we solve that problem? How can we solve that problem? And the kind of is completely different attitude, and it is slow. It is slow, but because things in the real world take time to develop. And the kind of the only difference is that in fact, you know, the technology that Cardano needs to do the things that would be needed in 3, 4, 5 years is already there for Cardano. For many of the other projects, it's simply not there. So you are buying things because of the hype in it today, and you look at things, Andrew, because of money that you can make. You're thinking about in terms of money here, rather than in terms of technology. And this is the kind of the problem that people have with projects like Cardano, and the same thing with Polkadot as well. These are projects that are taken 6, 7 years to develop. It's not something that you do. You wake up with a new coin that comes up today, and all of a sudden you're going to dominate the world. It's just not going to happen. Simply, you know, some of the projects you've seen come to the market because they want to be first to markets, have real fundamental problems that they're going to have to deal with at some stage or another. Now, projects like Cardano, like projects like Algorand, have already dealt with it, and they're ready for the futures. Other projects are not. Look at that. What Cardano did from day one, the proof of stake. Ethereum is taken years. You know, they've been talking about this since 2018, and 2022 they still don't have proof of stake ready. Okay, so kind of put things into perspective. And I don't want to carry on talking about Cardano because I'm not a Cardano maxi. Okay, but I do like Cardano. I do like the approach, and I do like the scientific method behind anything that is done. And also another important thing, you know, everything that Cardano does is open source. So it is kind of like a gift to the world. It's not just a selfish pursuit for shareholders or coin holders or whatever you want to call them. But it is something that is, once they have worked out how to do something, it is released out into the world, and everybody is free to use them. This is the kind of technology that's going to be the backbone of nation states in 10, 15, 20 years time. And that's why I am so bullish on Cardano, because this is the real deal. As simple as that. Okay, so I'm not interested about what price is doing now when you have a huge community of Ethereum developers and other projects that, you know, all they seem to do kind of 90% of their time is to spout poison around Cardano without looking at the facts. If you start looking at data, so any data that you want to measure, just tell me what you want to measure, and then we'll have a look how Cardano fares compared to any other competitor. Okay, so just judge this, and if you just tell me that something is doing well or not because of price, then you need to look again, man. Okay, because
all
price
right,
is
Cardano's not your girlfriend. Stop being horrible to Andrew now.
No, just saying. You got to stop looking at price. Generally, you got to stop looking at price as a meter to decide if something is doing well or not, and that's important to understand. You know, because if you do that, you will miss all the opportunities out there. Okay, because by the time you get to them is once you see that something has gone up 50%, 60%, 70%, and you've lost the boat already. You missed the boat. Anyway.
All right, we're not taking any more questions or comments now, guys. We're well over time. We're already busy, and we need to end the call. So sorry to take control and be such a dominatrix, but we've got things to do. And I don't know if you've forgotten, Luca, you and I have also got a meeting right now. So if there's any final words you'd like, we're all going to be here next week.
Yeah, no,
I'll carry on, do what you like. I'm just nipping off. I'm leaving the call and I'll be back with you for our meeting very shortly, Luca.
no, that's fine. Okay. No, it's, I just want to say, I enjoy having these chats with you. And if you want to have more of it, then obviously we have a community of people that I work with. If you're interested in joining, then the details are in the circle, in the products section. So just look at that. If it's something that you're interested in doing. There's not going to be any hard sale from me because it's not who I am. But it's I'm just showing you what what I do and how I look at things, and it's something that resonate with you, then get in touch with me. If not, then I enjoy having you here anyway, and I look forward to seeing you again next week. Okay, so goodbye everyone.